Alrighty, folks. Good evening. I've got my lab coat on. Uh, this is the lab coat I wear when I'm sitting here for at least, let's see here, 14 hours. It's not bad. Some might say it's unhealthy, but I do take strategic breaks, hop on the bike, cycle 40 kilometers, do some weights, all in between uh, my scheduled work, deep work. I like to break down the day between the live sessions, AI coding, team meetings, looking at the charts, and some other special things. Yeah, without further ado, let's bring up SPDas and get this session started. I think we got 1 minute to go, but why not just go? Let's do it. SPDas, we are ready for you, and the trading floor is yours.
Yeah, thank you, Igor. And hello and welcome everyone. I'm just a bit of heavy throat, that's all. So let's get started off with gold at this moment, and as we start the Tokyo Sydney overlap 28-29th of Jan, when we come back to euro, followed by the dollar index, then I think gold is actually pushing a bit higher towards 65, 67 overnight. Let's do a quick wave count. Largely count suggests we've got wave 1, 2 and extended wave 3 already printed, and we are now looking at the wave 4 correcting decline, completed its last leg somewhere around the 2500 zone, with a potential wave 5 out there. Still remains for a new buy. Now, just a moment, I'll quickly change it to my minor. And let's zoom in a bit. That entire rally has multiple sub-waves within. That is 1 degree, wave 3, wave 4, and wave 1. That is wave 3, wave 4, and 5. So the third and fifth wave were extended both, which is quite, it's not very normal to happen it all the time. That's why I keep saying this is a classic example of the third wave extension. What we see on the right hand side now is a potential minute degree ABC in the making. We go minute A, B, and C. All right. So wave B, if it was an expanded flat, it would have gone print high just above the previous one. It has reversed just ahead of that, and that puts into the category of minor standard flat actually. And what we are seeing right now is a potential wave 2 of lower degree being carved out right away. So that's 3 down and 3 up. So the pattern itself is a bit turning out to be a corrective one. It's not that the third wave is extending. It's not clearly indicating that the third wave is extending. We are. It could be a 5 wave lower from here, which could drag prices towards 2643 or something. Uh, Technically speaking, till we have not broken the 75 high. So until that happens, it is still possible that prices turn lower from here. Remember, we have went short. We went short with a stop around 75 for aggressive traders overnight. That trade still remains active, and let's see how the price action shapes up from here. But the near-term target still remains around the 2690, that is the 2700 and 2640 respectively. So please hold on to your short positions right now. If you haven't taken a position yet, it is okay to wait for one more session for the price action to get clear. I don't want this to be an impulse. We don't want this rally to be an impulse and then get stuck on the short side. All right. So that's the story for gold. We will have to wait for a while before wave C kind of produces lower lows again, or begins to produce lower lows again. All right, but overall, we still need to, our goal still need to print that minute degree wave C is lower somewhere in the category of within the vicinity of 2500 going forward. There you are. It's quite lower, but we will consider at least mid 24. Even if it drops to mid 24, that's fine for wave 4 to complete, and it's also falling under the vicinity of, it's in the region of the Elliot channel. Let me do it once again. It's quite a few number of days we have seen the daily chart for gold. There you go, touching 1 3 and pulling out the second wave. So that's wave 4, right? So this is what ideally should be happening. Ideally, this is what should be happening. We are looking for a 5 wave decline. That's what the roadmap should be. I mean, that could be the next path. We just need to see that first wave click before anything else happens. All right. It might just take some more time. That's what it looks like. The only thing I'm a bit worried about in the last few hours as prices push through the 65 handle is that is it another impulse forming? And if it is, then we might have to, by the next session, we should be coming to know that by the London overlap, yes, the London hours, we might have to just flip trades, or we might have to sit on the sidelines for one more time. All right. Okay. Let's start off with the Euro USD now. All right, I've kept it as it is, but we can start with the daily chart as always for the first session. The daily chart suggests price action is quite a bit sideways since last few hours. If you have noticed, wave my impulse wave 1, 2, 3, 4, and 5 are is in place. All right, and corrective ABC has also completed. It's bouncing. It's already bounced right from the 61.8% Fibonacci as well. There you go. And on the right hand side, what you can see is the nice little smaller lower degree 5 waves, which is quite clear on the hourly chart. There you got waves 1, 2, 3, 4, and 5. And unless the third wave is extending, I think we are right on track for a good corrective decline, which is completed wave A here. I'm going to remove the earlier Fibonacci, which we did on the daily chart, just so that there are less lines. So you see that fourth wave sideways, we are still in a potential wave 4 sideways, and there could be one more low for wave A to get complete. All right, so let's be prepared for that. And before it actually begins to correct itself, remember we are already Wednesday. We were starting to talk about a potential reversal. First session on Monday, Tokyo Sydney overlap day before yesterday. So we are already midweek, and we are expecting this to complete by Friday. Now, looking at the time frame, today could be the day where you quickly get a wave B. So either prices drop lower first and then go higher up. The time is only 2 more days with respect to the next weekend being ready for a February rally or extension for Europe. All right. So we got still 48 hours time where these two waves ideally should be completed. All right. And we've taken the short positions. That is an aggressive short actually, where we would want to limit ourselves around the 1.0480 with a stop 555 and target 320. So trading point of view, if you are a positional trader, nothing needs to be done. We are already holding long positions from 250, if I remember. All right. So nothing needs to be done if you're a positional trader. If you are a short-term trader, we already booked profits, and we are waiting for another entry to be taken around the 320 zone. But if you're an aggressive trader and if you're playing both sides or want to play both sides, remember one trade is already booked yesterday. We took some profits there, and we are now waiting for a corrective wave B to complete in that zone around 480-90 zone. So you got another entry possibly around 480-90 with a drag lower towards 320, 330. All right. That is the short-term story and the potential trade setup for euro. And let's pick up the dollar index now. And we can straight away do the short-term wave counts where wave 1, 2, 3, 4, and 5 at a lower degree. Or it is quite possible, see, it is quite possible that the third wave has extended already, and we are in a wave 4 kind of a corrective wave, which is I'm keeping it open for now as the potential wave 3 ending and wave 4 in the making. That makes a lot of sense as well. Maybe one more drop towards the weekend, and next week we start correcting. That is also quite possible. So let's put it as an alternate count. Right now we are quite convinced that we've got wave 1, 2, 3, 4, and 5, and we are potentially into a corrective mode where wave A is almost complete. Wave B is where we are going to enter for aggressive traders and targeting. We are looking for 109 target for short-term traders. All right. For long-term traders, we have already entered aggressive shorts around about 110. That was too aggressive though, but we are holding short positions from 109.50 already. So nothing needs to be done with stop around 110. The larger degree story for the dollar index is also up on your screens. We've got five down, and followed by three-wave rally plot ABC just around the 0.61 retracement, and also the first lower degree wave on the south side. We're kind of looking for another wave two higher. It's going to be very interesting because the long-term traders who have taken shorts are absolutely nothing to worry about, because even if prices decline or begin to decline from here, continue to decline from here, they are going to be in the trade. That's why we keep on saying, please do not exit completely on the short side in the dollar index, while the euro USD kindly hold some positions on the long side. Generally speaking, overall dollar weakness could be continuing. Maybe we can have a quick view at the dollar JPY major as well. It's already a five-wave decline here. That's a lower degree. It's going to be very interesting I'm waiting for the theory sessions to begin. It's going to be very interesting because the theory first and then these practicals will make a lot of sense. We can actually combine both and bring up more variety in terms of learning and practicing. You see wave 3 and then a triangle. That's a triangle. A, B, C, D, and E. And the fifth wave. The only thing we need to change here is the degree because it's an hourly chart. That is a minute degree. We've got wave 1, 2, 3, 4, and 5. It's just a replica of what we just saw on the dollar index side, correct? And so the overall or general dollar weakness could be just beginning to unfold. And you see that wave A potentially complete here on the northern side as well, where we are just lagging a bit behind on the dollar index. So once you're through with the dollar index, you get a lot of clarification on the general dollar strength or weakness across the board, whether it is talk about dollar JPY or you talk about pound USD or other crosses as well. There you go. So we are kind of waiting for wave B lower and then a rally towards wave C. So potential trade for the dollar JPY, we just found out in the hourly chart short term. Let's match it up on the daily chart as well. Let's have a quick view there. So we've got a larger degree wave 1 followed by a corrective wave 2 of a larger degree complete as well. Just like the dollar index. So I think we are good to go short on an hourly chart as well. That is the range where we should be looking to enter shorts 157, and the stop loss ideally goes above 158.90 or so, so 159, 159.50, and the potential extension targets are just coming up on the screens now. Let's extend. We've got 150, 150 down there, so almost 700 points to cover. February is going to be a good one for dollar pairs. It's now beginning to look like across major dollar crosses. All right, sir, we can have a quick view on the. I think the Dow would be almost static right now, but let's have a quick view. Yes, it's almost static, but we continue with our stand of potential U.S. or equity markets. Dow Jones specifically, who is actually which is lagging behind without a new high. It's almost there, but it's not a new high still. So we'll wait for wave two to reverse. Even if it goes and prints another high, I mean, that's only a matter of time before this reversal should be beginning to cut loose on the south side. So let's leave the indices for a moment. We have no recommendations for SPX trading point of view, but the coins, I think we were keen to get on the long side. Okay, so let's see what has happened. So that particular trade buy Bitcoin around 99 has triggered. So we are in at least just a minute. So we are in from at least one level 99. That was a partial long triggered. Just in case if it drops lower to 96, we are prepared to go long further. And the upside is around 115. So we are in the Bitcoin trade, at least for now. By the time we are in the next session, that is the London, after a few hours, it'd be nice to see how the waves are unfolding or they have unfolded. Depending on that, we would also want to reduce this risk because that's the fifth wave, which is subdividing into lower degrees, and we would like to come out of this risk as soon as possible. So let's say this price action moves up there above the 103 mark. I would be more than happy to just place the stop at the break even and let it run thereafter. All right. So that's the trade plan for now. Let's see if Ethereum also got us in once again. Yes, it has done, but you see that corrective drop has been much deeper than what Bitcoin is. But we've already gotten in around the 3,000 mark, 3,100 mark. Stop loss remains at 2,900, just below that low, and target for 4,300. So we are not changing anything as far as the trade setup or target is concerned. The only thing is we got to watch out for the next few hours if we can quickly reduce the risk that we have taken right now. It's of course a calculated one. And all the time, only one thing keeps rolling into my mind. We are just around the last wave and got to be a bit careful on the risk side. Nothing else. For Solana, let's see if Solana got us in around what 220. Yes, sir, it has got us in around the 220 mark as well. Uh, we are just around 228. We are expecting one more low. Sorry, so 220 is still a wave for us. If that is wave four, I think we are going to see one more low before Solana picks up on the north side again. So let's hold on to our limit orders for now, and let's see how the price action shapes up. But as I keep saying, the risk reward ratio needs to be handled properly into this last potential wave rally. We are still waiting for the Ripple to get us in. I think it is 2.84 and it dropped towards the three handle again. That pullback is quite shallow in Ripple as compared to other coins. It's quite possible that we might not get on the long side or not get a chance to get on the long side once again. But we got to just stick to our trade plan with respect to the risk reward ratio. Suppose if we get in now, I mean, it would be a bit tighter when we say a stop there, 2.8. It's okay with the potential target of 3.7. So either you can get partially in right now if you want to, or you can just hold on to the limit orders that we have set earlier around 2.84. All right, those are the coins, and I think that brings us to a pause for this session, and we'll be back again after a few hours to touch base and continue the story where we are leaving right now through the London session. And I'll be handing over to brother Igor now. Igor, back to you. Thank you very much.
SPDas, thank you very much. Always a pleasure. Alrighty, folks, we're not going to waste any time here. There is another session coming up in London for the London session. SPDas is back. Elliot Wave Theory. Then we got IT Trader for New York Open at 8 a.m. EST. Schedules posted on X. I will do my best to try and get the schedule up on the intro and outro cards as well. That way it's a nice reminder. And of course we got those calendar links. It's going to be in the portal. You can sign up for the alerts and everything like that. Looking forward to the rest of the week, the rest of the trading week, and of course, stay tuned for updates from the tech side. Over and out. We'll see you in a few hours.
ForexLens gives you the edge. ForexLens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. ForexLens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with ForexLens. Check out our performance at forexlens.com. Get the edge on trades. Your eye into the markets. forexlens.com.
Hey, before I forget, if you're just tuning out, please like the live stream, especially if you're finding value in it, and repost it, share it with your friends, help out a ton. Adios.